strategy. Moving on to Tesla. Sorry, I didn't have Tesla all set up for you guys. Tesla started the week at $956 per share. And I think Tesla was the last stock we said was on breakout alert, and breakout it did. It went all the way up to $1,114. I think I got this perfectly. I mean, you could tell, like, it's Friday. I love patting myself on the back. I believe last week's Fang Stock recap show said NVIDIA, Microsoft, and Tesla were all set to break out, and all three of them did. And I'll talk about that from a technical perspective as well. I know a lot of you are watching this. You're buy and hold investors just like me, and you have maybe a retirement account, a self-directed 401k, whatever it might be. Maybe you're doing this for your children. So, you know, you're buy and hold, but some of us like to trade on top of that because we're following the market so closely. I'll show you again what I saw in NVIDIA, Microsoft, and Tesla that made me believe these things were going to break out. And it's my most favorite setup. If I had more time, I just was in the hospital with my son. He just had a broken arm. They had to reset it, but it was mildly serious. If I had more time, okay, and I've been dealing with all this other stuff during the last week, I haven't had a lot of time to trade these stocks. Otherwise, I would have, because when they set up in the manner that they did last week, it's just a predictable pattern what's going to happen. Tesla can become a $2.5 trillion company. This is Loop Ventures' Gene Munster. He's a famed Apple analyst as well. He thinks they're going to be able to, this is Tesla, going to expand their revenues from about 70 billion all the way up to about 400 billion over the next 5 years. If you do an Apple-like multiple, which is about 6.5 times sales, which I don't think is out of the question. When we did Tesla's earnings last week, it's a company running at like a 30% gross margin, which is really about what Apple runs at. Apple runs at like 30% net margins. So Tesla not quite as good, but they could get there. Okay, it's possible, since they're there now. It's possible they could start squeezing out 30% net margins, and I think absolutely you could pay 6 times sales for that, and that would impugn a 2.5 million would be amazing. A 2,500. It's Friday. Give me a break. $2,500 stock price on Tesla. That's nearly 2.5 times higher than where the stock is right now. That would give you that $2.5 trillion valuation. Now, maybe the comedy relief of the show is the GM CEO says, absolutely believe we can catch Tesla in EV market share by 2025. Wait, let me check my phone. What year is it? Wait, it's 2021. It's almost 2022. They think they're going to catch Tesla in 3 years in EV market share? Oh, come on. That's a joke. Come on, please. There's nobody. I don't even think she believes that, let alone anybody in the stock market. Now, Tesla soared this week, not because of earnings. That was last week, but soared after landing the largest EV deal ever with Hertz Rent-A-Car, which I thought was in bankruptcy, but I guess not. And they're set to plug in 100,000 cars. Now, we cover Tesla enough here, and every month they report the amount of deliveries that they do. And we're seeing they're on it like a 250,000 car run rate, somewhere in that 200,000. This is to be delivered over the next 14 months. So this is about like 2 weeks of cars basically bolted on. So very interesting from that perspective. I also know, just because I've reserved 3 Teslas over the last month or so, I know you can lease these cars incredibly cheap, but there's no buyback option. So I can lease a Model 3 for like $200 or $300 a month, but Tesla retains the right to take that car back. I can't personally buy that. Otherwise, I think that'd be a fantastic deal from a tax perspective and likely a cost perspective as well. So I chose to buy my Teslas outright. But what I think is interesting is Tesla's probably going to have all these cars coming off lease. Well, if they've got customers like Hertz that are willing to take on some of these cars, that could be absolutely fantastic, and I think could really expand the margins over at Tesla. Here's the other thing that I thought was interesting with this Hertz deal is Tom Brady, just legendary quarterback. He's going to showcase Tesla vehicles in a new Hertz ad. So Tesla doesn't spend money on marketing. I think, as we all know, the company has not done that traditionally like other car makers like GM. I mean, they advertise the heck out of their cars. Tesla does no, quote, traditional advertising. They don't actually pay for the marketing. Well, here's another example where they got an order for 100,000 cars, which is, I think it's like over $1 billion worth of revenue, maybe even closer to $2 billion worth of revenue when we're talking about the revenue on that 100,000. And what do they get on top of that? They get one of the most recognizable and most respected athletes in the world to now advertise for them for free. I mean, this is just brilliant. Me as somebody that studied marketing in college and still appreciate it to this day, I mean, I love this. And if Tesla can continue to do that, basically get paid billions of dollars for their product and then get that company to advertise for them. I know it's Friday, but that just made my Friday even better. Tesla did the same thing that NVIDIA and Microsoft did. We broke above all-time highs, which are right at basically $900 on the dot, and then we went straight up in the air like one of Elon Musk's SpaceX rockets. This thing is just catching altitude now. Okay, it's way up here, way up at all-time highs, $1,120 per share, and who knows when this thing will stop. Okay, Tesla is a big, I mean, I'm not breaking any news here, right? Okay, Tesla is a massive momentum stock. When you look at the stock chart, this thing goes on big runs and then goes sideways, goes on runs, comes back down, goes on these big runs. A pullback to $1,000 per share buying opportunity with Tesla.